Good afternoon, ladies and gentlemen. A very warm welcome to all of you in this COVID-19 and implications for the Saudi financial sector webinar. My name is Mansoor Usmani. I am the Director, Learning and Development at Carlyle Square Consultancy Limited. I have been engaged in learning and development in KSA for the last 25 years. I will be moderating this seminar. We thank Financial Academy for their encouragement and support in organizing today's webinar. CSCL, Carlyle Square Consulting Limited, was established in UK and Bahrain to provide end-to-end solutions for risk, finance, business strategic consultancy, fintech solutions, and training and development. Today's session will be 45 minutes with an active, lively Q&A at the end. Some participants have already emailed us interesting questions on Saudi economy and banking systems. Tariq will respond to those questions first. During the session, please type your questions in the chat box on the right-hand bottom of your screen. We will attempt to respond to all the questions at the end. Now, please allow me to introduce our presenter. Mr. Tariq Javed is the CEO of CSCL, Carlyle Square Consulting Limited. He is an ex-central banker and regulator who is well known and well respected in the kingdom, with over 33 years of experience, including implementation of Basel I, II, and III in KSA. His major contributions have been in the development of national policies, laws, regulations, and reforms related to financial and banking sectors. And now I will hand you over to Tariq.
Thank you, Mansoor. Thank you for your introduction. I would start with, again, welcoming all my friends from almost all parts of the world who are joining this webinar today. A number of people from Sama, from the Saudi banking system, friends from Australia, from Pakistan, from Dubai, from Bahrain, and then, of course, London, and then Canada. All of them have registered. I hope that we can add value for them from the seminar. The purpose of discussion today, is COVID-19, and as many of you know, this is 55 days that WHO had declared this to be a global pandemic. Like many of you, I've been in self-quarantine in Canada with the family since then, and there's been an amazing change in my personal lifestyle. No driving, no flying around, no socializing, and most importantly for me, no golf. I don't know how many of you can relate to that, but it's a real sacrifice. On the other hand, I had time to do self-reflection. I had time to read some books. I had time to see some films I would have never seen. And most importantly for me is my screen time has doubled. I've really become part of the digital age in many ways. I'm sure you must have been going through the same kind of experience yourself. Today's main topics, the agenda is history of pandemics, very brief coverage of that, is global impact of COVID-19, the impact on KSA. That's the main guts of this presentation. Challenges for regulators, financial firms in KSA, and then a very brief talk about importance of fintech and regtech, especially in the post-COVID-19 COVID-19 area. And finally, a few words on a new world. I haven't used the word new world order because that's politically not correct, but a new world. We'll stop there. Going on, let me just start with the history of epidemics and pandemics. Human history has been full of epidemics and pandemics, and that history is too long, so I will only cover the history for last 100 years. And almost 100 years ago, in 1918, the world was faced with Spanish flu. This was right after the end of World War I, when the troops going back home carried the flu to all parts of the world. And as a result of that, an estimated 500 million people were affected, of which 20%, which is a number of 100 million, who apparently died. The economic impact could never be measured because it was at the end of the World War I. And so from there on, since 2020, there have been 6 major epidemics and pandemics. They're listed here, but what comes across to me is that in the last 10 years, there have been 4 of these, starting with the swine flu pandemic, which affected Asia, and then MERS, which affected Saudi Arabia and other countries around the Gulf, Ebola, Africa, and then COVID-19, which now again affects everyone in the world. So what the message here is that somehow, maybe because of our abuse of the world's environment, the ecosystem, maybe the nature is coming back to us with full force. And the frequency of these epidemics and pandemics is growing. 4 in the last 10 years, that's quite a long list. Anyway, COVID-19 is an important one because we're all facing the challenge of that. Moving along, this is the latest statistic as of yesterday. 212 countries affected, 3.7 million cases now, of which 258,000 deaths. Recovery is 1.2 million, which is almost 1/3. And then the main question comes in, how long will it take to flatten the curve? Estimates that I read are between 3 to 12 months. Very optimistic is 3 months, not so optimistic 12 months. And then returning to the pre-COVID situation, it seems like there's a consensus that this may happen between 12 to 18 months because they're expecting a vaccine to have been developed in that period. And once vaccine is there, then we'll go back to the pre-COVID scenario. Let me just continue. A couple of things I wanted to sort of focus on. One is the terminology, social distancing. I had never heard it before COVID-19. I'm sure most of you had not heard of it. And then some other terms which have now emerged: reaching the peak, flattening the curve, getting back to the norm. So these are new, this is a new jargon, but it is very, very important. Of these, I think social distancing policy, distancing is affecting policy at the level of the government, the business, and all of us at a personal level. The governments, for example, are faced with a choice of how to implement this. And then they have choices of having a curfew, having lockdowns, or selective closures. And each one of these have a different implication in terms of what happens with the population, in terms of activities, economic activities, and is a different economic impact. And we have seen countries from Sweden to New Zealand to Europe to Asia exercising these choices. And of course, we have to still sort of find a way of measuring which was the best choice, but I think it depends on the countries and their particular situation. But there's no question that these policies are causing layoffs, bankruptcies, and supply chain disruptions. Moving along, here's a very interesting chart. This is done by the Singapore University of Technology and Design. They are getting their information from various sources, and they're coming up showing this curve. A curve for reaching the peak, flattening, and then coming down. For the world, they're predicting that the pandemic's main force will be over by July the 8th. For Italy, it's supposed to be for June the 8th. For Singapore, is supposed to be very early. It's supposed to be May the 9th. And also, most importantly for us in Saudi Arabia, it said June the 18th. But if you look at these charts closely, you can see that still the world is, even as of yesterday, was going above this curve. Singapore actually has followed the curve very closely. And Saudi Arabia, we don't know whether we've reached the peak yet. So the curve is there to guide us or help us, but still the reality could be slightly different. My own expectation is that these dates are too optimistic and it may take a few weeks longer than what is on this chart. Now, let me come to one of the main points, that what is the impact of COVID-19 on the global markets and the macroeconomic situation of the world. This is apparently one of the most deep, this will cause a very deep recession, as much as the Great Depression of 1930. All economic sectors are being affected. Global economy, according to IMF estimates, will be shrinking by 3%. This actually is interesting because last year IMF was predicting it will grow by 3%. So there's a 6% change in a very short period of time. The advanced countries are supposed to be now, this year, negative 6%. The emerging market countries are supposed to be 1%, and the average is minus 3%. So that's a huge shift, just as a result of COVID-19. The GDP of the oil-producing countries will be reduced by 10 to 15%, a massive change from last year. Because we have seen significant volatility in the stock markets lately. They've been very volatile. On March 11th, the Dow closed at 23,000 points, which was down 20% from only a month earlier, which was February. Talking about another macroeconomic factor, which is oil, very significant shift here. The demand for oil has dropped by 30 million barrels a day. OPEC and Russia, when they came together, they were able to reduce their production by 10 million. So still there's a gap of 20 million. This is causing massive volatility in the prices. We know the Brent is now around 20-25, and WTI is even lower. And we all saw the situation when it was minus 40 just a few weeks back. This is also causing massive unemployment around the globe. Every country is affected. US unemployment will exceed 30 million people, which is almost 12% of the US total employment. Similarly, some industries like tourism have been massively affected. 100 million plus jobs have been affected. And you know, tourism contributes to 10% of the global GDP. So massive shift here as well. Now, moving ahead, what's the impact of COVID-19 on the global banking sector? Here, I would like to just maybe draw back into what happened after the global financial crisis 12 years ago. In 2007, when Lehman Brothers failed, it created a contagion effect throughout the global financial system. And many major banks were affected, many failed, and many were bailed out by their governments. Huge organizations, to name a few, Royal Bank of Scotland, Citigroup, and even Goldman Sachs were affected by it, and the governments of the day bailed them out. Now, there are two reasons why COVID-19, all this a global event, has not affected the global banking system as deeply yet. One, since 2007, there has been a significant buildup of high quality capital and high quality liquidity by all banks across the world. This was as a result of the G20 countries coming together, Basel Committee issuing standards for Basel III reforms, which have now been largely implemented throughout the world. So as a result, capital and liquidity situation in the banking system has been very good. The second reason is the government themselves, G20 governments, through the coordination at the G20 arena, IMF, World Bank, were far more ready to deal with a global event. And this time they were very, very quick to throw a lifeline to the financial system and institutions, which has so far prevented a crisis. We will come to those lifelines in a minute. Nevertheless, the first quarter results, which are in front of us, are starting to show what is happening. There's a decline in profitability of almost all banking institutions. HSBC, you can see, is half. National Bank of Australia profit decreased by 50%. Santander Group, which is a European bank from Spain, has slipped by 82%. So you can see that almost every major bank and other banks will be affected. The prediction of bank default rates in US, Europe, and Asia is over 10%. Well, I was mentioning to you the response and the preparedness of the G20 countries. Look at this. US has cut the interest rate to almost 0%. Many other governments have followed it. UK government has cut its benchmark rate to 0.1%. And this is the historically lowest point ever. Most G20 countries have come down. Even Saudi Arabia has lowered the interest rate. I think we are around 50 basis point now. And Europe, Japan, and all the other Asian countries have followed. The other major thing has been the lifeline provided by the governments. Take US, for example. They have come up with a $2.3 trillion package for lending to businesses, for lending to state and municipal governments. That's a huge amount of money. I think it represents almost 10% of their GDP. And similarly, other countries have also come out with huge stimulus packages across Europe and Canada and in Saudi Arabia. Now, moving on, the regulatory authorities have not been far behind. We all know that the Basel III rules, which were to be finished by the end of 2021, are now postponed for full implementation till the end of 2022. Similarly, some parts of the international accounting standards have been postponed as well. And then other regulatory authorities like IOSCO and International Insurance Supervisor are also following. Just on the front for the banks, capital requirements in most countries have now been eased, and regulators are allowing banks to use their buffers for the purpose of meeting the capital requirements. Expected loss provisioning rules are being eased, especially this IFRS 9 implementation, and even where we had tighter regulatory rules, such as in Saudi Arabia, they are being eased. Dividends and other payouts can now be delayed. The regulators have given permission because they want banks to have a good cash and liquidity in their hands. Okay. We have covered the global impact. Now we're into the main part of this presentation, which is the impact on Saudi Arabia. These are the latest KSA statistics of last night. There are 30,000 cases. There are 25,000 still active. 5,000 have recovered, and there have been 200 deaths so far. So Saudi Arabia is not doing too badly. The only issue seems to be that we haven't yet hit the peak. If you recall the curve I showed you earlier, we were still reaching for the top, but hopefully that will be starting to come down. So the curve should be flattening. It's expected to happen within the next 3 to 6 months period. The Singapore Institute was showing it by mid-June. That is, to me, a little bit optimistic, but on the other hand, they could be right. But as far as the returning to the pre-COVID period, that I think is tied to the development of the vaccine, which I think everybody estimates will happen between 12 to 18 months. So this is the same situation in Saudi Arabia. Now let's move to the industry which were most impacted in the KSA. We all know that air transportation was completely halted, so all flights, so Saudi, and of course all the other airlines in Saudi Arabia were affected. Tourism, just like everywhere else, is seriously affected. And most importantly, even the religious tourism related to Umrah and pilgrimage has stopped. And the chances are there's still some question mark whether the Hajj will take place this year or not. And if the Hajj does not take place, then of course it's going to have a huge impact in terms of the revenue generation that Hajj and Umrah brings about, because it affects everything. It affects the hotel industry in Saudi Arabia, it affects the retail industry and transportation industry. Oil I've already covered. Saudi Arabia, of course, has a great dependency on the oil revenues. So our revenue stream in Saudi Arabia has been seriously impacted. And of course, that will have its own cost. Construction is the largest sector in Saudi Arabia as far as employment is concerned. And because it's halted temporarily, so it is having an impact on the employment and cost of that. Banks will cover it more deeply. But another interesting point here is that, like everywhere else in the world, the digital sector is likely to benefit from COVID-19 because there's a lot more awareness and knowledge of what technology digitalization can do. And even the fact that we're having this webinar today where I'm sitting in Canada and you're sitting somewhere else and we can have a chat, that to me is a reflection of the world which is ahead of us. And in Saudi Arabia, we will certainly take advantage of that because already this was a major issue in front of the authorities. And so we expect this will go further. Let me just move on. Impact on the banking sector. Now, this is a main part of my presentation today. And in fact, many of you will be very much interested to hear my views as an ex-central banker and regulator on what you think, I think is going to happen with the financial sector in Saudi Arabia as a result of COVID-19. Just to mention that, what are these estimations about? I actually did an informal survey of my friends in the banking industry in Saudi Arabia to get their views on what they think the impact will be on these points. And also I used the help of a tool, a stress testing tool, which I learned about from a friend of mine in London. And this tool has been used to look at the data which came to me. And it also has, this tool has also built in the COVID-19 experience and what is likely to happen by using COVID-19 data. Basically, it tells me, gives me some estimation on the flattening of the curve and the impact of that on the numbers. Essentially, the idea is by using this tool, I can get the three scenarios: the base scenario, the mild or medium scenario, and the extreme scenario. Here, I have then used my judgment saying, okay, this is my estimation of what will happen on the Saudi financial sector. Now, of course, the first quarter of this year is gone. So we'll now be looking at what happens in the remaining 3 quarters. The first quarter, by the way, has not been all that bad. The numbers which I've seen coming out of Saudi banking system reflect a situation which is a continuation of 2019. But I think the real impact will start happening in the second and third to the fourth quarter of this year. The 30% of the loan book is likely to be restructured. This is one estimation, and the reason is because of the fact that the companies will have difficulty to pay back, and also because of the funding that is likely to come from the government. This government has all kinds of programs. Many of the loans will be restructured with the approval of some. which means that everyone, industry will take advantage of that, both at the company level and the individual level. So loans will have to be restructured. The other subject which is dear to the heart of everyone in Saudi Arabia is the SMEs. SME current exposure of the banking system is about 100 billion, and you can add also the finance companies here. They're about 25, 30 billion, so about 125 billion total. Now, the government has many measures which is going to take to ensure that the funding to this sector continues. Banks will be required to help the sector out, restructure the loan, give them more time. Kafala fund fees will be also taken out. So as a result, I think a lot of, I don't expect the sector to grow, but at least hopefully it would not shrink as a result of COVID-19. That is the real effort. The credit growth in 2020, I expect it to be in the lower single digits. I think only 6 months ago, when the banks were sort of finalizing their anticipated budgets for 2020, most banks would have said that our growth is going to be high single digit, or even some of them said in the double digits. But now I think the whole thing has changed. My expectation is it will be lower single digit growth this year. Almost all banks are considering deferral of discretionary projects. I think this is very sensible. I think all of those banks have projects in the pipeline, and they have already have capex and opex budgets. But my understanding, talking to people around, is most of these would be, wherever there's opportunity, the projects will be deferred. And this also has been made a bit easy by the regulators, allowing banks more time to implement international standards. Moving along, very key question. There are two questions, one interrelated. One is, what would be the NPL ratio for the banking sector? Historically, the NPL ratios in Saudi Arabia have been quite low, 2%, around 2%, and even lower. But what is the expectation for 2020? Now, using my stress testing model, I sort of anticipate that the base model, which is simple, is that I expect the NPL ratio to double. But if I take the mild medium scenario, then they may even triple. So that is what is going to happen with the NPL ratio, and that's a massive change. It's a big change, because historically, from year 2010 to 2020, the ratio had been between 1% to 2%. So it was very, very low. Provisions are expected to increase by 30 to 40%. This is my estimation. And that means the coverage ratios of all banks will be coming down. Our average coverage, Saudi Arabian banks' average coverage ratio in the past has been around 200%. So we expect them to be coming down. And this is despite the fact that regulators, SAMA particularly, would maybe ease some of the rules dealing with provisioning. Banks will be very severely affected by lowering of interest rate. Our banks always benefit when the rates go up, because the cost of funding is low, and as a result, their margins increase. But now when the interest rates are declining, it will bring SIBOR down, and as a result, there'll be a stress on their net incomes. My estimation of the overall net profit is that they would decline under my base scenario by 1/3 compared to last year. And if I take the mild or medium stress scenario, they could be down as much as 2/3. I'm not going to talk about the extreme scenario, and there'll be no net profits. But luckily, Saudi Arabian banks have a way of being resilient, and they've faced so many crises in the past that I think they'll survive this time as well. Government debt is to increase. Therefore, the liquidity which authorities are going to provide to the banks could be used to do that. I don't expect any credit demand, credit growth, so therefore liquidity would not be needed there. And luckily, Saudi banks' liquidity position has always been very good. They have met the ratios nicely. LCR is anywhere between 200%, and NSFR is about 130%. So therefore, liquidity should not be an issue, and also government is providing more liquidity. But they can use that to invest in government securities for the time being. Capital adequacy is very, very strong with high internal and regulatory buffers. Well, I also want to just take a minute of your time to tell you that why I feel very confident that we have a very strong and resilient banking system, and why things would not be as bad as they could be under a different scenario. This is because of the history of the banking system is that SAMA is very close to the banks. It has protected the banks for the last 70 years. And SAMA, has a policy that no banks should fail and no depositor should lose its money. It's an unwritten policy, but it's a policy which has been very effective. And SAMA only allows strong banks to exist in Saudi Arabia, and even the foreign banks which have been allowed are the best banks in their own countries. They're all either DSIBs or GSIBs. SAMA as a regulator is a forward-looking regulator and has taken the lead in implementing the global standards such as Basel, international accounting standards, even IFSB standards. It's always a leader. And that has ensured that the Saudi banking system remains strong and healthy and resilient. And last but not the least, I think the banking culture is that even banks themselves are very, very prudent, they're conservative. They don't take on risks that they cannot manage, and they don't sell products which they cannot understand themselves. Finally, one of the factors I want to mention here is, which people tend to ignore, that Saudi banking system over the years has also become largely Islamic. And that's very, very good because Islamic banking has some inherent advantages, does not allow too much leverage. Also ensures that the work is done, the transactions are done, supported by real economy. So these are the advantages. This is why I'm quite optimistic about the Saudi bank system to be able to meet the COVID-19 event and come out in the positive. I don't think any bank will go negative here. Moving on, I'll just want to quickly recap what the financial measures that have been already taken by SAMA and government. I think you're probably familiar with it already, but it's just, I'll be remiss if I don't mention that. And this again tells us that the government of Saudi Arabia was very quick this time. It knew what it had to do, and they moved. They basically wanted to give assurance to the financial markets and to the industry that the government is going to take effective measures to meet this crisis, this challenge. Stimulus package has been set aside for banks and finance companies. I believe this will provide liquidity, cheap liquidity to the banks and finance companies to meet their difficult times, especially when government is asking them to do a lot in terms of deferral of principal and interest and so on and so forth. The concessional finance for SMEs, 13 billion has been set aside. That's the amount which directly would impact the banks. Then going forward, 6 billion of kafala fund fees will also be paid by the government. And most importantly, the 800 billion set aside, and this is where banks have been asked to give concessions to the customers, but the government will pay for it, 800 million, up to 800 million. The Ministry of Finance has also been very quick. They have created a scheme where 60% of salaries will be paid to of the employees, where companies decide to keep the employees in place and don't fire them. So this will be for the next 6 months and up to Saudi Riyal 9 billion. Private sector dues, 50 billion has been set aside. so that government can quickly pay the private sector dues this time, and also for defraying the cost of the electricity bills for a period of time. Expats will also benefit. There's a 3-month period of revision, and then the last is the postponement of government fees for 3 periods. Now we come to this other measures taken, and this is the measures to be undertaken by banks. Here SAMA is required banks to do this, providing concessional bridging loans for at least 6 months. We also flexibility in repayment of consumer finance, waiver of fee and charges on digital banking, waiver of minimum deposits, banks to review credit cards. All these measures reflect a historic sort of pattern. SAMA always is concerned with not only the banks, but also the ultimate consumer, the retail customers. And this is consistent with SAMA's policy to make sure that the retail consumer is also benefits from the government's initiatives. And this is what SAMA has done. And of course, Ministry of Finance is involved in instigating private sector job retention schemes for corporate customers. Now, this matters which had to be considered by SAMA and CMA before they could come to these decisions on how much money has to be. But I understand that some of these assessments, this work is still going on. SAMA has made some announcement, but it's in the process of deciding how the actual transfer of funds will take place. It will take into account, make an assessment of the impact on asset quality, capital, liquidity of the banking sector, and then determine allocation of government and SAMA funding. This is work which I believe is either very close to completion or still in process. But once it's done, then all the monies which has been set aside will flow. One matter here which I want to raise is the design and conduct effectively macro level stress testing exercise. One of the things which comes across to me is that in order for the government, SAMA, CMA, and the banks to make decisions, stress testing has become even more important than it was before. Before, banks were asked to do stress testing twice a year. SAMA itself would have been doing stress testing maybe once a year, and CMA maybe was doing the same thing. Now, I think the requirement would be to do the stress testing frequently, have input on such matters as the flattening of the curve, and when the vaccine is developed, built into those stress testing exercises. Also look at the government schemes of defraying, paying for some of these costs. And all that has to be built into the stress testing exercise to know exactly what the likely impact is under a base scenario, under a medium scenario, and an extreme scenario. And only then you can start doing your plans. SAMA and CMA have already provided relief in terms of supervisory ratios on postponement of regulatory things, also provide accounting and regulatory guidance on COVID-19. One of the other areas which SAMA and CMA has to worry about is the effective communication with the rating agencies and with the international regulatory authority. This is extremely challenging and sensitive area of work. Ratings are extremely important because they can have a great impact on the cost of funding from the international markets. And SAMA in the past has handled this very, very well, so has CMA. And I think this will be a real challenge. Finally, for CMA to protect the integrity of Soviet debt and equity market is extremely important, especially given the volatility of the equity market these days. They have to be very, very vigilant. Let's continuing on. This slide I put aside saying, okay, if I was asked by, let's say, chairman of a board as to where he should focus as a result of COVID-19, if I was asked to come as an advisor and guide him, then I would say the most important thing for him is to set the tone at the top as a result of COVID-19, what kind of uh, tone he sets is going to be a huge impact on all the other aspects. Your business strategy has to be revisited in the context of COVID-19, and not just doing your ordinary routine analysis, but a much more deeper analysis, where stress testing, I think, maybe a refined stress testing will be required to look at the extreme scenarios, mild scenarios, and base scenarios. Nobody could have predicted 6 months ago that we would actually go even beyond the extreme scenario, but we have. So that's important. Crisis management has been tested as a result of COVID-19 for every organization, but there must be some gaps and weaknesses which have been identified. So they should be filled. I think an assessment has to be done on what can we learn from COVID-19 experience and what gaps and weaknesses came up. Use of technology. I can't, make too many comments here, because use of technology fundamentally has to be now looked at even more deeply than before. Every bank was on a bandwagon of digitalization and technology, but now with COVID-19, it's even more important. I think the entire workplace will change, and how the technology is used is going to be very interesting. Employee well-being, that has to be a very, very major concern of the board of directors, because you want to have employees which work in a healthy environment, who are covered in terms of insurance and all the other things which go with, which are affected by COVID-19. This is very important to keep your employees safe, secure, and happy. Liquidity of the institution is very important. There's a real distinction between those institutions which are liquid and which are not liquid. So liquidity management has to take a very, very high profile. Capital and debt management, of course, we want to maintain the balance in this area as well. And maybe it has to be looked at in the context of future needs. Dividend policy, I think here the only question is, should the company pay dividends, or should it conserve cash, and how long it will be before it can go back to a normal dividend policy or a share buyback policy. It's important. On the financial matters, potential impact on balance sheet and P&L is important. Here, again, a lot of judgments and estimates are involved, and they have to be exercised. A lot of assumptions are made, and I think you have to be quite careful as to how deep and substantiated those judgments are. And the judgment made will also have an impact on your ultimate bottom line. Government support measures, there are quite a few, and I think require a very deep review of how an institution can take advantage of all the measures. This also has an impact for your bottom line, so it has it has to be looked at very closely. Last but not the least is transparency and disclosure, and also a communication strategy. I think whatever an institution does, it has to have it should be done with due regard to transparency and disclosure, both to public and to the stakeholders, whether they be investors, your suppliers, and your regulators. And that also requires to have a communication strategy. So these things are important matters. And I think we have. Okay, I think this is for the board. Now, from the perspective of common challenges for the financial sector, I've tried to put together a list which I as a CEO or senior manager will have to be confronted with. But then if you go through the list, a lot of these things are your normal things anyway. Business continuity, management plan, effective planning for capital, revised budget forecast, understand the implication on profitability. And you will say, well, what's new there? I think what's new here is that you have to now look at these issues in keeping in mind the COVID-19 experience and what the changes in these things as a result of COVID-19. Certainly at this juncture, this stage, every bank has to go back and revisit its budget for 2020 and even maybe 2021, keeping in mind what expect to happen with COVID-19. And for that, it has to have some view as to on the issues of flattening the curve, the development of vaccine, pre-COVID norms. So you need to have tools, maybe stress testing tools to help you with those decisions. You also have to go back and establish shareholder expectation. That's very, very important. And then maintain because shareholders have to be satisfied. There's another important point is maintain continuous dialogue with regulators to notify any upcoming issues. You have to keep close to them because they're coming up with financial schemes, and you have to also keep close to them to keep informing them of what you are seeing in the market. So it's a two-way dialogue, it's very important. Maintain effectiveness of employees' productivity. I think basically now that you have a workforce which can work from home, from different places, you have to look at these things very, very deeply. Continuity of IT operations 24/7, yeah, that's very, very important because you cannot afford to be not able to serve the customer these days. It has to be 24/7, it has to be online, and technology also has to come in. And I'll move on. Let's go, okay, specific challenges for the banks. I think I have belabored the issues. All right, okay, here's the challenges for the authorized persons, APs. I think they have to ensure market conduct and consumer protection principles are observed in the volatile markets, explain the nature of each product as risk have increased multifolds, deal effectively with stop losses and accurate variations. These are specific to the securities industries, and the APs will have to be very vigilant and be able to conduct this. On the other hand, for the APs, there is a market-related advantage. They can provide sort of these hedging instruments to their customers. This funding needs will increase. They could help their corporate customers to raise funds. Merger and acquisition will increase as small business may be absorbed by large businesses and increased. So all these are actually market opportunities for the APs. So they can benefit from COVID-19 by providing these services. Okay, challenges for the finance companies. I will say that they have to really focus on a couple of things. One is liquidity. Liquidity is going to cost them much, and they have to be liquid to be able to come out of this COVID-19 crisis. They have an increased risk of loan defaults and an increase in provision. So these are important matters for the finance companies. They also have to maximize the use of government support and measures because they can get some money there to help them out. Now, moving on, insurance companies. I think insurance companies will also be vigilant. I think they have to build in their policies, especially for travel insurance and for health insurance, the impact of COVID-19. This is going to be a very significant impact on them. And they also have to provide continuous service. One area which they should be really aware of and vigilant is fraud is going to increase, claims, and so their ability to verify those claims and challenge them and then decide whether they should be paid is going to be a challenging area. Moving on, credit bureaus. Yeah, I will just advise both Sima and Bayan that they have to also be, they're affected by COVID-19 as their methodologies, especially for scoring and rating, have to now bring in the experience of COVID-19 into play. So, and also the government support has to be factored in. So they have to also communicate to banks and their customers on the changes they made to the scoring system as a result of COVID-19. Moving along, I come to a section called RegTech. Now, I've highlighted this here because I know this has been a topic on the agenda of the G20 meeting which is supposed to take place in Saudi Arabia in November this year. And many seminars, conferences have been held. And I think after COVID-19, there will be increasing focus on technology and the solution and technology. In my limited experience over the years, I think I've seen fintech and regtech solutions which are there, which are very creative, which have come into play, especially in the last couple of years, and which I think many banks are already starting to look at. There's a solution on stress testing, which is there and which I've used, for example, for my modeling. And this is one which has built-in COVID-19 experience into it. It gives you, has the abilities to give you very good information very quickly and very in a very good manner, so that you can use it very effectively. Ability is enhanced. Another tool I saw is helps you to meet the regulatory requirements according to your country's laws and regulations. It helps you with the ICAP, ILAP rules and regulations and business continuity. It covers a whole range of subjects like risk and therefore, I think this kind of solution can also be used off-site, because you don't have to be on-site. And this allows you to do a self-assessment both to SAMA and to the banks on the compliance of the industry. Fintech solutions which deal with digital payments, faster payments, and faster reconciliation of all the information which is available are there. Anyway, I don't want to belabor the point. It's an important area. Let's move on. Okay, this is my last slide. I think we are into a new world order. The world will never be the same again. Social distancing measure will be a norm. And this is going to, for a number of years going into the future, will drive policy at all levels, government, business, and personal. Dependence on technology will increase. I've mentioned that many times. Working from home and flexible working hours will be a norm. We've all experienced this already now for the last couple of months. I think there's very significant advantages and disadvantages. But I think this is going to be a major change in the way we work. I heard that UK will be having 3 shifts of work just to put less burden on the transport system. That's a wonderful idea. I think we should all look at flexible hours. Airline industry practices will change. I think this affects most of us. We used to fly around without any thought. And just now, you're going to have to be very careful where you're going and when you're going. And medical checkups before check-in may become a norm. Well, a new world order, which will go post-COVID-19, will have social, cultural, behavior changes, which will also have major impact on the economy. Now, this is the end of the presentation, but I'll leave you with 3 main questions. And the first question is, will there be a second wave? Now, there's a lot of talk about the possibility of a second wave. If it does happen, there's going to be, a major event again, because it will cost a lot of economic hardship. First wave is difficult, the second wave will be even more challenging. Next question. When will the vaccine be available? And this is very important for us to go to the pre-COVID norm. Until this happens, everything is delayed. Nobody will feel safe, though major events like soccer games and tennis events can happen. It affects all of us. And then the last one is, when will we return to pre-COVID day? I think I've maybe gone overboard in harping on this, but that's a very important question. I thank you very much for listening to this webinar.